Good morning everybody and welcome to Stockradar Stocks in the Move for another week. Today's date is the 18th of July 2024. My name is Richard Lee and I manage Stockradar.com today, your website for you. Well, price never lies, so we're having an exciting time at the moment. We've got a wealth of riches and the new highs at the moment. They're coming from everywhere. We're seeing a bit of breadth coming from our market as some stocks start to rebound. Not triggering new highs yet or reversals, but certainly coming onto the watch file for me. So I'm going to go through a few stocks today just to show you what I do, why I do it. Okay, so a couple of positive thoughts for you this week. Well, the Dow's broken out again. It had a pause. We've got the indices making new highs, the Nasdaq and the S&P. I know the Nasdaq came back last night. Reinforces the polarization we have of our stock markets these days. The banks drive our markets. The tech stocks drive the American market. And the bigger they get, the more forceful they are and driving the index high. So it's important that we do have a good quality bottom-up approach to our analysis of our stocks if we're not trading those stocks. Okay, so that's important. So positive this week is the new high indices. Run with it, don't doubt it. And when they're there, you just follow it. Be confident and be brave. Okay, so that's very important. And also we've got gold, which is also broken out to new highs as well. So getting a few push from new stocks there. We'll look at Newmont a bit later on. Exciting market. Again, not all stocks are doing it. A lot of them still going down, believe it or not. But there's some exciting new highs. There's some exciting bunch of stocks about to break out. And there's also some stocks we're just not interested in at the moment, but that's the way it is. Okay, so stocks are about taking off at the moment, which is quite exciting for us all. We've had a very tough time a few years ago, and we're now starting to look a little bit more exciting. So here we are with our top 10. Now they're nearly all new highs. As last week, actually every stock we covered last week in the top 10 were new highs. This week, the only one that's not a new high, but is making new highs is IAG. It was actually triggered by a trend reversal quite a few months ago. But all these other stocks here, you've got Aristocrat. Bendigo Bank's doing an amazing job considering what BOQ is doing, which is sideways to down and struggling to break up. But Bendigo Bank's gone, we'll have a look at the chart a bit later on. Well, there it is there. It's gone from $8 to $12 this year. Okay, so why? I'm not too sure, but there's the volume there. It's something to follow. And again, the reason why is not that important. The fact is that it's actually happening is good. We might find some news about this a bit later on, but you just follow the price action, and it will tell you what to do. CBA's crazy, making new highs. Every stockbroker seems to have a sell on it, and it will come down at some stage, but for the moment it's running. It was breaking out above 110. It's now 133, 134, and doing amazingly well. A couple of miners there. IAG, JBH is now broken out. NAB's another bank which is running to new highs. Newmont and Pruis is also broken up. So that top 10, pretty solid, pretty happy with those stocks at the moment. The actual stock pick count just chipped in another 2 this week. A couple here, a couple there. It's always exciting. We don't want them all coming in and all falling out. So it's just a steady increase in stock picks, building our market. And our market, as you know, has broken a new highs. We'll have a look at that chart a bit later on. So 46 stock picks is your pool of stocks that you want to focus on at the moment of the 155 that we cover. Okay, they're the ones that are trending higher with valid trend intensity ratings. Okay. So that's about it for the stock pick count. Let's get and have a look at the stock market itself. So firstly, the Dow Jones, a nice little break high there. And it was a pretty big move. Was it last night, the night before? So over 700 points. I think there's one big stock, a United, a healthcare stock, which drove a lot of that move. And the Dow is a 30 stock thing, so it can be moved fairly easily. Although having said that, the polarization in the other index is also causing the big stocks to move them pretty well. So it's tricky to watch following indexes because they don't really give you a good idea of what the whole market's doing, just the major stocks. Anyway, this is making new highs, good for sentiment, which is great. We look at the S&P. It's also making new highs. I mean, we saw a new high here back in November or start of this year, and it's just gone on at a correction. It's making new highs again. It's just new high after new high pretty well. And the Nasdaq has been the same. New highs trigger new highs, and that's what's happening. And this is really powerful. And look at this volume here on the Nasdaq. It's just extraordinary. So, we're really happy about this at the moment. So I just push the microphone a little bit closer so you can maybe hear me a bit better. So the new highs are doing pretty well there. Then we go to our market. Our market is breaking up. As you can see, we've been pretty patient with this one. It's taken a while. It held a support bubble. Then we've got these serious higher lows here, which pushed this break, and we've now finally got a good move higher. And some of those leaders, the miners are not doing very well at the moment. All those banks are really pushing this index higher, really driving this index. So that's the ASX 200. We look at gold. It's broken out. It's a commodity. It's broken out. It's a good volume. We saw some sliding volume here during this corrective phase, which is always a good indication of a corrective pattern. And then we see an expansion of volume and the price rises. That is what they call a bull market. So with the expansion of this rally and the momentum positive, looks like I've spelled width wrong down there, but that's okay. I think we can live with that. But it looks very good. You get the idea. We've had a pause. We've had a break up. And we're seeing a few stocks like that. We'll look at Wesfarmers a bit later on. Cochlear's another one, interesting one at the moment, doing that sort of pattern where it has a rally, has a pause, and then starts to break higher again. So gold looks pretty good. The other two commodities, not so good. Copper's sort of struggling a bit. It's not really showing much down here apart from red bars here. So we had one big up week here, which is a bit of volume, not huge, but there's certainly pressure on copper at the moment, and also Brent crude. The sellers will whack this one again. As soon as it rallied again, the sellers just came back in and started to drive it down again. So not happy about Brent, but that's the way it is. There are plenty of other things for us to trade on the market. Okay, so now let's go and have a look at some stocks. Okay, a few you've seen before, but I just want to reinforce this because the importance of these new highs that we see is, it's something to behold. I mean, it's a really quite a simple process for us. So we saw Aristocrat change its spots very quickly here. Something happened. We don't necessarily know what. We don't necessarily need to know what. In fact, that it happened is the most important because we follow the price, and that's what drives our decision making. So it turned around here. It then broke to new highs. We didn't buy it here. We broke it on the new high. We bought it on the new high, and it's now rallying quite well. Volume's been good. Momentum's good. It's above the moving average. Trend intensity rating is 10 for Aristocrat. We go down to Wesfarmers, which is also interesting. Had that pausing pattern across here for quite a few months, really. All we can do is really take the yield there and just put that little bit in the bank and just be patient and wait for the market to move higher. But we had all the indications here. It was with plenty of good volume here. We had some selling tests here, which it mattered to hold above our stop loss and our average. And it's now turned around, and we had a little bit of volume, not huge yet, which means there might be a little bit more to come. But it's above $70 now. So the trend after this pause is continuing. And remember, this is all-time highs up here. So this is quite a key area to break here. We did hover around here for a few months, trying to struggle there, selling, buying, selling. But the buyers now seem to be winning this war and are driving it higher again, which is excellent. Rare Group's the other one, which has broken to all-time new highs. Did a similar thing. It's sort of patterned around here for a while, had a bit of a sideways move across here until it eventually broke out, and we're seeing new highs again. It's having a good week this week. Volume's always a bit tricky on Rare Group, but the colour of the bars tells me more than anything what's going on. So these are all green bars, which means the price is rising. And it has risen since about 176 in April this year, and it's now over 200 in July. So that's a good move for Rare Group at the moment. Okay, we did talk about Bendigo and Adelaide briefly before. I can just review it quickly here. You can just see what's happened here. We've had a nice big trading range that was stuck in for quite some time, and now it's broken out, and this is new highs. So it's a little bit interesting because Bank of Queensland hasn't really done this. It's been struggling a lot. So there's something different between Bendigo Bank and Bank of Queensland that's triggering this rise. Volume has been pretty good. Momentum is good. So again, it's one of these situations where perhaps we don't know why, but we just follow the trend, raise our stop, and let things unfold as they will. Because news is news, rumours is rumours, facts are facts, but price is also price, and that's what we profit from, and that's what we lose our money from if we're not careful. So a good rise here, always followed with your stop loss to make sure you are protected. Okay, the next one I want to look at is Newmont, which is a relatively new listing, so not a huge amount of history here, but it is being a very good break up here. We had our high point here, which is at about $61. It broke above there back in April this year quite nicely, corrected back, and now starting to take off as the gold price starts to shift up higher again. So we don't have a lot of momentum information here, but it is positive so far. Volume's been a bit tricky to read, but generally all the indications of average, momentum and price action, the most important, is telling us this stock is going higher, and it's a big gold stock and it's a big safe gold stock, because we know we find the volatility of some of those gold stocks and smaller miners really makes it quite hard sometimes. So we've got to be a little bit careful of that. But something like Newmont is a little bit different because it can't be pushed around quite as easily as some of those smaller miners. So that's why we like the bigger ones. Okay, now just a couple of the banks. Again, I mean, the banks have been the story really, and we can't ignore it, but there they are. They keep going higher. And if we look at NAB here is now 37.77, having been $26 in June last year. So it's had a pretty good rise over the last 12 months. Not really one pause here, one pause there, but generally some very, very nice trending behaviour. Volume's just been pretty steady. If we want to just get rid of that stuff there, we can see a little bit. It's just been steady without knocking the socks out. But again, it's a weight of evidence that we're looking at for. So momentum's good, moving average is good, and the price is rallying. So again, a new high, and we just take the break and we follow it with a stop. And in these sorts of markets, it works well. Okay, ANZ, well, it's struggled for a while because it's had this big resistance pattern here, sitting there for quite some time for ANZ, and this is going back to 2018. But we're now starting to see a little bit of a movement above there, which is quite exciting, I think, because for ANZ, there could be a little bit of catch-up happening here because it hasn't really performed as well as the other banks. But it's really now starting to make a new high, and that's significant to me. I think the breakup's probably going to come this week. If it does close above there, trend intensity rating is still neutral at +1. We need to confirm the break this week with a valid break. And all these other indicators here, volume's okay, it's above the average, and momentum is positive. So it's probably going to get a positive rating if it does confirm the break above the resistance there this week. So that's the banks, which are really beautiful, and even another bank we can go to, which is now, again, a bit like ANZ. It's in struggle city for a while. For about 1, 2, 3 years, it stayed below that $212 level. It's now hitting on it, targeting it in no uncertain terms. Volume's been reasonable, momentum's good, so that's a good thing we want to have, and it's also holding above the average pretty well. So there is some resistance up here, which it seems to be taking on board fairly easily. So we're hoping to see a break above here to give us a new signal for another bank. So again, all these new highs are very good. I'm going to talk about a little bit about new highs later on, but it's a bit about why. But it's so important that we just make sure we follow them because they're there and they're there for us to profit from. Okay, now, next stock is Santos, which we saw last week again. It's still sitting on that level there, just cannot seem to get through there. And I guess really there's been a bit of pressure from the oil price because it's not been that strong. And that's we've been in this range for a while, but for some reason we're getting a bit of volume here. This is just starting to tick up a little bit. Sort of wondering what's going to happen here with Santos, if there's something interesting about to boil over there. So keep your eye on it. If it does break higher, we will follow that. And whether we know any more news or not doesn't really matter to us. If the price breaks higher, that's the signal, because those that are in the know will be taking the price higher, and that's what they do. So give us a little bit of inside knowledge, if you like, as to what's going to happen. So Santos has been dormant for a while, but maybe about to break up. So exciting one there. Okay, a couple of other stocks for you. I've got Cochlear. I mentioned before you about stocks that have been pausing within uptrends, and this looks like a pause. Cochlear is now starting to look like it's going to target that high again. Hopefully we'll get through and we'll see another leg higher. Trend intensity rating is 10. It's holding above the average. Volume is healthy. Momentum is positive, although it has slowed. So slowing momentum is fine. It's like, remember, it's like acceleration. It's like taking your foot off the pedal. You still go forward, but at a slower pace. So that's what momentum's all about. So we've just slowed our pace a little bit and gone around a corner or something like that. But we're now starting to hit the straight again, and we're targeting those highs again, and momentum's going to start pushing up high if it breaks through. So Cochlear is interesting. And we've also seen CSL's another stock, which I don't know if you looked at the chart lately. It's certainly worth a look at, but it's certainly having a shot at those highs again. It's had numerous attempts and failed again, but certainly worth watching. in the scheme of things of what's happening in the whole market situation at the moment. So keep an eye on CSL. It's probably worth happening. If it does break out, it's been in a huge range for a long time, and that is really quite exciting for me to see a breakout of such a big trading range. Okay, all right. So the next one I've got for you is Premier Investments, which we took a trade in this one before, and we got out of this one. Sorry, we'll just get rid of that one again. And we got out of Premier Investments. We got stopped out on the pullback from here, but now it's turning around. Remember those situations where it goes down, sideways or up. It's looking like it was going to go sideways. Now it's looking like it's starting to rally a little bit and going to challenge those highs. So that's an interesting one. And the thing we like about this as well is we've got some really nice volume building down here, and the momentum is still positive. So it ain't all over yet. It may be just a minute pause, but we did stop ourselves out. We took a good profit on this rally here, and we're just standing aside, waiting for the next move to happen. And if it does break higher, well and good, we'll go with it. If it doesn't, we'll stay neutral. Okay, but keep an eye on it because it's worth watching. You can always see the weekly updates every week on Stockradar as a trend intensity and any breakout levels and any stops that we set or move each week, especially for the stocks that are rising at the moment. Okay, a couple of other stocks I got for you today. Busy, lots of stocks. ASX. Well, I don't think I've looked at this for probably 10 years, but no, I'm just joking, but for a long time because it's been going down. It's suffered a whole lot of things like the chess disaster, the new computer system disaster. But finally, from coming up around about $95, it got down to about $55. We've seen a rally, we've seen a pullback. It's made a new high, or if you call it a double bottom, it's close. It's still a good support area, and it's now rallying higher here. Quite sharply on very good volume all of a sudden. So that really piques my interest. And we've got momentum here just under trigger, just sitting on around zero. So the thing I like about this is we've got this downtrend line, a horizontal line, and our moving average. Remember those three things I look for the switch zone. Okay, once we get through that, that gives us some good evidence that the stock market wants to go higher. So really it's the horizontal level here that we're watching closely. This is looking like the switch zone. The actual trend reversal level is above here. We've got good volume and good momentum. So it's looking quite interesting, and it's in that lovely neutral zone that we like of trend intensity where the breakouts occurred from. If the rating was a lot more negative, we wouldn't be so bullish, but things are turning, as you can see there, and demand is appearing. So we can even see here, a little section through here when the ASX jumped quite sharply back in December last year. We saw some good volume here. The sellers came in on the rally. This is all part of the bottoming process. It takes a while to clear out the sellers, but once you clear out those sellers, you've now got the potential for the market to rally as we start to get rid of some of those sellers. Anyway, it's certainly worth watching in ASX. Look for updates on Stockradar on that one. Now the other one is the properties and property stocks. We've got GPT here. I think it's Charter Hall, and maybe is it Mirvac. They're all starting to move quite well on some interesting volume. They've suffered quite a lot of late. But they're really starting to turn a little bit, especially the last couple of weeks. We've seen a significant change in behaviour. So we've seen a sharp rally here from $4 to nearly $4.60. We've seen some good volume. Momentum is turning, is at neutral area. So we're still at -4 here, not quite there yet, but potentially a rally above here could target R1, R2 for GPT. So have a look at the other ones. Have a look at Charter Hall. Have a look at Mirvac. They're looking interesting, and we all know what Goodman's done. It just goes through, goes new high after new high after new high. So where it will stop, I don't know. A bit like Magellan, they just keep making new highs. And this is what markets do. They surprise you on the upside. You've just got to follow them, and that's how you really make your money, rather than chopping out early and letting the market escape you. So don't let these trends escape. Follow them and keep on top of them. Okay, right. There's plenty of stocks for you today to look at. Plenty of things for you to review next week in Stockradar to see where we're at. I organise everything in my trading centre for you by sector, by trend intensity, so it's easy for you to read, and you can see where my stops are, where my trend intensity ratings are, and it's very clear and easy to see whether I'm a buyer or seller of those stocks. Okay, so that's all the stocks I got for you today. Just one little tip of the week, or my little comment of the week, is really just to tell you, I mean, new highs are new highs, and I know I bang on about this, but they're such a reliable signal, and they're so simple and easy to follow. Okay, and we're getting them now. We've had a tough time for a while, but when we get these things, I remember 2003, 2006, it was just a wild time where we just made so much money because there was so much new highs, and that's when you've got to do that. You've got to be in the market when it's giving you, the market's presenting these things to you, so you've got to take them when you can. So the only thing holding you back from following your system is worry rather than fact. Oh, is it going to keep going? Is it going to keep going? I don't know. That's a thought, that's an emotion, not a reality. The reality is a new high has occurred. It's not a guarantee, but it certainly is an odds-on trade to follow. Okay, so new highs are nearly always a surprise because they are new highs, and we need to sort of get used to the fact that a stock is making a new high in price because it's a new thing for us. And it's sometimes difficult for us to attach ourselves to. But once we get used to accepting new highs and the markets do move higher, then we've got a good chance of being able to comfortably follow those new highs. So once we get comfortable with the momentum trade, it's a highly reliable and rewarding price action, and we work in the safe and less volatile area of the top stocks. The top 200 stocks is all we cover, not the smaller ones. There are a lot of good stocks down there, but it's not my thing. So you need to know a lot more about the fundamentals, a lot more about who's holding what stock. That's important. But the bigger stocks are harder to manipulate and move around, and they trade much better on price analysis. So that's why I trade those stocks. It is really all about managing your risk and taking your signals, and that's really all my game is. Okay, so that's all for today. I hope you have a great day today, and we've had a good week this week, and I hope you have a good week next week and the week after that. But things like the Nasdaq and the S&P, they won't go on forever. So be careful. Just make sure you're always prepared for the other side. So you must have stops in place for all your stocks. Otherwise, you're at risk. Okay, so watch your trends, heed your stops, stay safe, and I will see you all next week. Thanks very much.